Good evening and happy holidays, everyone. So, in part one, we established that Canton and XRP aren't competing, they're complementary infrastructure. Now, we're going to talk more about the numbers that Wall Street whispers about behind closed doors. Canton Network, 6 trillion assets on chain. XRP Ledger, 365 million of real world asset market cap. You're probably thinking, wait, that's almost a 6,000x difference. But that's exactly what mainstream media wants you to think. But in reality, these numbers tell a completely opposite story about their institutional strategy. So we're going to dig into the power structure, the funding, the tech architecture, and we'll reveal more in this segment. All right, let's break down the numbers. I know context is everything. Canton Network, 6 trillion in on-chain assets across 600 institutions. But what that actually represents is institutional custody and workflows, not public trading volume. The bulk of that 6 trillion is Broadbridge's distributed ledger repo platform. It processes 4 trillion monthly in US Treasury repos. So basically, these are institutional workflows that happen behind the scenes, banks lending to each other overnight. Now, when we look at the XRP ledger, 365 million real world asset market cap, at least as of quarter 3 2025, we see that XRP ledger's real world market cap exploded almost 34x in 2025. It basically went from 0 to 365 million in 1 year. And stable coins, it went from 354 million market cap to almost 34,000 holders. So, what's the difference here? Canton measures custody value. That's assets tokenized and held in private workflows. The XRP ledger measures public market cap. So that's assets that are traded and held by users. It's kind of like comparing the value of gold sitting in Fort Knox versus Bitcoin trading on exchanges. Both are valuable, obviously, but totally different markets. But here's what crypto media isn't saying. Canton's 6 trillion is mostly same treasuries being repoed repeatedly. The daily repo volume is somewhere around 280 billion, meaning the same collateral cycles multiple times. The XRP ledger, 365 million, well, that's net new tokenized assets in public circulation. That's an entirely different trajectory. Okay, let's look at the power structure. Who actually controls these networks? This is going to reveal more about the institutional strategy. Canton's foundation governance, at least as of December 17, 2025, DTCC and Euroclear are co-chairs, not advisors, not partners, but co-chairs. That means they have governance power over the entire network. Now, who else is on the Canton's board? We have HSBC, we have Broadbridge, we have Digital Asset, we have Goldman Sachs. We've got many other advisors. Now, This essentially is Wall Street's clearing infrastructure running on the blockchain. Fairmint CEO just got elected as the general director in December of 2025. So you've got institutional clearinghouses and fintech innovators sitting at the governance table together. This is permissioned governance by design. Now, if we flip to XRPL's governance, we know in 2024, 2025, the XRPL Foundation went through major restructuring. They moved from centralized control to more community-led governance with rotating independent chair people. The XRPL Foundation now has three membership classes. So they've got the individual members, institutional members, and they have founding members. They also launched the Zao DAO, XRP Ledger's first community governance protocol using XRP for voting. So here's the contrast. Ripple's corporate board, Brad Garlinghouse as CEO, Chris Larson, the executive chairman, plus external directors like Sandy O'Connor, Rosie Rios, former U.S. Treasury. But Ripple doesn't control the XRPL. They're just one validator across 70 plus independent validators globally. All right, so what's the difference? Canton says institutions trust institutions. Give them governance power. The XRP ledger says decentralization requires independent validators and community governance. Neither is better. They serve different institutional needs. Canton governance ensures compliance and institutional comfort. The XRP ledger governance ensures censorship resistance and global neutrality. Okay. Let's talk about the money. Who's betting on what and why it matters? Canton Network had a large funding round in 2025. June of 2025, Digital Asset raised $135 million, which was led by Circle, Goldman Sachs, and TradeWeb. This is the company behind Canton Network getting institutional infrastructure capital. Now, in December 2025, an additional $50 million by BNY Mellon, NASDAQ, S&P Global, and iCapital. You notice the pattern? These aren't VC firms that are just simply chasing returns. These are institutions that will use the infrastructure. That's $185 million in just less than 6 months from TradFi's elite. But here's what that money represents: infrastructure, investment, not speculation. BNY Mellon isn't buying Canton's tokens hoping for 100x. They're funding the company building their tokenization rail. Now, if we look at the XRP ledger's capital flows, we know in Q4 of 2025, US spot XRP ETFs attract 1.9 billion in assets under management. That's institutional capital flowing into the XRP ledger. Okay. 1.9 billion in assets under management. That's institutional capital flowing into XRP exposure. Not infrastructure investment, but position taking. In November of 2025, Ripple received $500 million in strategic investment, valuing the company at $40 billion. You had investors like RJAX, which is a tokenized security platform, and strategic partners building on the XRP ledger. In July of this year, BNY Mellon selected as a primary custodian for Ripple stablecoin reserves. So, what does that tell us? Institutions aren't choosing sides, they're deploying capital across both infrastructure layers. Canton funding equals infrastructure build out, permission workflows. XRP ETF flows basically equal institutional position taking, public asset exposure. BNY Mellon in both. They're hedging across complementary infrastructure. We got smart money. They're not just picking the winners. We got smart money that's building diversified infrastructure exposure. Okay, let's geek out for just a minute because the architecture reveals everything. The Canton Global Synchronizer, which launched in July of 2024, this is Canton's interoperability layer. You can think of it as a network of networks coordinator. Now, here's how it works. The Global Synchronizer enables atomic transactions between different Canton applications while still preserving privacy. You can take a bond on one Canton domain, use it as collateral on another, and settle in a third, all within a sub transaction privacy intact. The Global Synchronizer uses the Canton coin. It's a native utility token for ordering transactions and paying the fees. And it's governed by the Global Synchronizer Foundation. This is a basically a decentralized body for cross-domain activity. Now, if we look at Ripple's interledger protocol, this isn't new. Ripple built the ILP years ago to connect to any ledger, blockchain, bank, payment system. The ILP philosophy is ledger agnostic interoperability. It doesn't care if you're connecting to the XRP ledger to Bitcoin, Ethereum, to a bank's internal ledger, or Swift to a crypto rail. The ILP basically routes value across a heterogeneous system. And XRP ledger's cross-chain bridges, these enable XRP and tokens to move between the XRP ledger and side chains and other blockchains with atomic swaps. This is public interoperability. Anyone can build a bridge. So here's the difference. The Global Synchronizer equals interoperability within permission Canton networks. That's privacy preserving. The interledger protocol, that equals interoperability between heterogeneous ledgers, public, private, agnostic. They're solving different interoperability problems. Canton says we need institutions to talk to each other privately across domains. Ripple is saying we need global value to transfer between any systems publicly. And here's the kicker. You need both for full tokenization infrastructure. You still need private workflows that need Canton's global synchronizer. You need the public settlement, which needs XRP's ILP and those bridges. When Wall Street tokenizes assets on Canton but needs global liquidity, that's where Canton to XRPL bridges become inevitable. So, after all of this data, the assets under management, the governance structures, the funding flows, the tech architectures, what do institutions actually see? So Here's what smart money understands that retail investor may miss. Signal 1. BNY Mellon's strategic positioning. They invested in Canton, 50 million. They custody RLUSD reserves for Ripple. They build a infrastructure exposure to both private flows and public settlement. Signal 2, RLUSD's explosive growth. Ripple stablecoin hit 1.3 billion in market cap in 2025, less than 1 year after launch. This is now the 5th largest stablecoin globally. Now, why does that matter? Because the RLUSD provides native liquidity on the XRP ledger for institutional settlement. When Ondo Finance's tokenized treasuries trade on the XRP ledger with RLUSD, that's 24/7 institutional settlement with a dollar-backed liquidity. Canton can't offer that. It's private workflows on public trading. Okay, signal 3. Broadbridge is scaling Canton's repo from 2 trillion to 4 trillion monthly. This proves that institutional workflows work on privacy-preserving blockchains at scale. 280 billion in daily flows without the entire market seeing your position. Signal 4. The XRP ledger has seen 37.4% year-over-year real-world asset growth rate. While Canton's 6 trillion is impressive, it's mostly established workflows migrating on-chain. The XRP ledger's growth is net new tokenization. It's an emergent public market for real-world assets. So, what's the institutional playbook? Use Canton for sensitive institutional workflows, such as repo markets, security lending, private placements, where privacy is most certainly mandatory. Use the XRP ledger for public settlement and global liquidity, 24/7 tokenized asset trading, cross-border payments, stablecoin infrastructure. Build bridges between them for interoperability. You can tokenize privately on Canton. You can bridge to the XRP ledger for public liquidity. You can settle atomically. This isn't theory. This is infrastructure stack institutions are already building. You just haven't connected the dots yet. Institutions don't see Canton versus XRP ledger as competition. They see it as a stack. Private workflows, public settlement, and interoperability. That's a complete tokenization infrastructure. The funding patterns, governance structure, and technical architecture all support this thesis. Retail investors debate which will win, while the institutions are deploying across both strategically, and that is the alpha. I hope that you enjoyed this session and have a good night.